Welcome to today's investor question, and in this series of investor questions I'll be looking at asking the questions that generate the answers that you need to know. So first and foremost, today's question the question goes as follows: how does the yen affect American finance? In other words, how connected are the economies of Japan and the United States? For instance, for the month of July 2010, Japan ranked as the fourth largest U.S. trading partner behind Canada, China, and Mexico, with combined exports and imports of $15 billion US. That figure breaks down into exports to Japan of $5 billion and imports from Japan of $10 billion. In other words, this equates to a negative balance of trade of $5 billion, which is about 12% of the total US trade deficit of $42.8 billion. With all that money changing hands every month, the relative value of the Japanese yen to the US dollar is very important to both American investors and American consumers. Now let's have a quick look at a couple of recent events. On September the 15th, 2010, the dollar dipped below 83 yen for the first time in 15 years. This was followed by a steady 5-month climb of the yen to a level of over 94 yen to the US dollar. Currency talk can get a little confusing, but as a standard practice is to talk about every currency in relation to how many units it takes to buy one US dollar. So in the case of the yen, it went from requiring 94 yen to buy $1 US to 83 yen to buy $1 US. That's a rise in value of the yen, even though the number appears to go down from 94 to 83. But in effect, the dollar becomes cheaper for the Japanese investor, for the Japanese currency buyer, which means that also because the currency becomes cheaper, the dollars become cheaper. That means that any commodity that is listed in US dollars, and a very well-known international commodity that's only and always listed in US dollars, that being private aircraft, would have become cheaper to the Japanese buyer. So, in reaction to this rise, Japan's finance ministry intervened in the foreign exchange market by selling the yen, with the result that the value dropped back down to 85 yen from the 94 level. Because that would, again, because when the value of the yen went to 94 against the dollar, it became more expensive for Japanese companies to purchase their goods from the US. So, looking at stock markets, again, the value of stock markets, because a country's stock market, say for instance the Nikkei index, will be listed in yen and not in US dollars. So, when the yen devalues from 83 down to 94, it means that the Japanese stock market, effectively in US dollar terms, will reduce by the same amount of value. And obviously from a country's economy point of view, if the primary stock market takes a dive when viewed in the major international currency, it simply means that that stock market will see money flowing out of it rather than flowing into it. which is definitely not what the Japanese would want to be having. So that in a nutshell is why it is important to the US investor to be keeping a close eye on what is happening to the yen. For instance, as the yen becomes weaker, it creates a greater US trade deficit because the US exports become more expensive, which means Japan will be looking to other countries to make those imports, so which means that effectively the US will be selling a smaller volume of goods to the Japanese market. So that is my take on the matter and how the value of the yen affects the US economy. Stay tuned to my channel for more of these type of important investor questions that I'll be looking into over the course of the next days, weeks and months. Share this out amongst your friends. Click the thumbs up if you like this type of content, thumbs down if not, that way I know what to be putting out in the future. And last but by no means least, down the bottom of the screen over here is a big red subscribe button. Hit that subscribe button, that way you stay subscribed to my channel for all of the new content that comes out on a day-to-day, week-to-week basis. Stay safe out there, and I'll be seeing you next time. Cheers.